Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services and another divorce mortgage planning video quick tip. In part one of our Rapid Credit Rescoring series, we provide a background on rapid rescoring, when this technique is most helpful, and its overall purpose. In today's part two, I'll review the practical application, because in divorce files, the question isn't just whether rapid rescoring exists, it's whether it can be executed fast enough to preserve a settlement-driven refinance deadline. Now, if your settlement strategy depends on a refinance, equity buyout, or post divorce purchase, Divorce Lending Blueprint for Success is designed to help you spot the mortgage qualifying issues that most often derail approval: credit, debt to income ratios, and documentation timing before deadlines are triggered. Download your complimentary copy here. In a Florida divorce refinance, the timeline is often dictated by settlement terms, an equity buyout date, a refinance by deadline, or other financing requirements. The challenge is that underwriting evaluates the loan using what is currently reporting on the credit report at the time the file is underwritten, not what the client intends to pay down or what was paid yesterday. Rapid rescoring is designed for this scenario. It is not a fix for negative history, and it does not override loan program guidelines. It is an expedited update process that helps verified changes post faster when you have the right documentation. Two practical reminders for attorneys. The rescore timeline starts when documentation is obtained, not when the payment is made. The most common delays come from incomplete or incorrect creditor documentation, not the rescore request itself. Rapid rescoring is typically a three-step workflow tied to documentation. Here is how it works. Step 1. We start with a manual and automated review of the credit report. This includes score simulation software to identify which actions are most likely to move the mortgage score and which actions waste time or available funds. The output is a prioritized action plan built around underwriting reality, not guesswork. Next, after the recommended actions are completed, the client requests written documentation from the creditor showing the updated information. From experience, most delays happen here if the payoff or paydown is critical to qualifying. Documentation should be treated as a deliverable, not just simply a nice to have. Step 3. The verified documentation is then submitted to our credit vendor, who works directly with the credit bureaus to update the reported activity. Once the updates are completed, a new credit report is ordered to reflect the updated accounts. Once we receive the documentation, the update cycle can take as little as 3 to 5 business days, with timelines varying based on the amount and type of trade lines. Here are a few helpful rapid rescoring reminders. There is no additional charge to the client for rapid rescoring. This is not credit repair, and we are not a credit repair company. Results vary based on a credit profile and what is reporting across the bureaus. It's also important to remember that a higher score in itself does not guarantee loan approval. Minimum credit requirements and underwriting documentation standards still apply. Rapid rescoring is relevant in divorce mortgage planning because it helps keep settlement timelines on track. Its value is how updated scores and updated trade lines affect underwriting decisions. A higher score can improve available interest rates, mortgage insurance, and program access when a file is near a cutoff. Debt to income ratios still matter, and the credit report still drives what debts are counted and how they are treated. And a drafting tip for our family law attorneys: anchor refinance deadlines to deliverables when credit is a concern. If the settlement requires a refinance or buyout, avoid deadlines that assume credit will simply update itself. When rapid rescoring may be needed, consider aligning these deadlines to identify which accounts must be paid down or updated for qualification, require cooperation to obtain balance letters or payoff documentation, allow a short rescore window after documentation is submitted for settlement flexibility. If paydowns are part of the plan, clarify who funds them, when they occur, and how proof of payment will be provided. Remember, if you need assistance, our second opinion service is here to help, provide at no cost to support your case strategy. Our second opinion service review includes a full review of the client's credit profile, guidance on how each account type will be treated for mortgage qualifying, simulated credit score and debt to income ratio changes before decisions are made, identification of hidden mortgage qualification risks, and recommendations on how to align the marital settlement agreement with mortgage guidelines. Just call, text, or email to request your confidential review so credit timelines are addressed before settlement terms are finalized.